they keep shifting the game. The game was the balance sheet. We all knew the game. Then it moved from the balance sheet to the Fed net liquidity. So then everyone's working out the TGA versus the reverse repo.
Yeah.
And then they went, actually, it's total liquidity because we're going to stuff it into the banks. And now the next one is they're going to stuff it into stable coins. All they're doing is fine. I mean, that's Scott Bessement's job, and Janet Yellen's job was the same. They're bond salesmen. They're just, they're masters of the universe bond salesmen, and their job is to find where to absorb this, and that is all part of the M2 growth.
Hey guys, welcome to Everyday Finance. In this video, Raoul Pal analyzes the current trends in the cryptocurrency market, particularly in connection to the meteoric rise of Bitcoin, while also drawing attention to the reaffirmed bullish stance taken by influential personalities such as Robert Kiyosaki, in light of the fact that Bitcoin has recently surpassed a new all-time high of $122,000. Kiyosaki, the author of the book Rich Dad, Poor Dad, has reiterated his bold prediction that Bitcoin will reach a value of $1 million by the year 2035 and $200,000 in the near future. At the same time that he is celebrating this milestone as a win for early adopters, he is also warning those who are still on the sidelines that not owning any Bitcoin at this time could be a historic financial mistake. However, he strongly recommends that newbies begin with a modest amount, even if it is only a single Satoshi, in order to gain exposure to this digital revolution. Kiyosaki said that he is personally purchasing additional Bitcoin and will continue to do so until the macroeconomic situation becomes clearer. He also cited the continuous global economic uncertainty as the reason for his decision. It was also brought to his attention that Warren Buffett just made the decision to retain a cash reserve of $350 billion. Seems to imply that even Buffett would someday accept Bitcoin as a form of asset storage.
I think at worst, it's the latter. At best, we saw this happen in the 1950s and 60s. I alluded to that before. World War II, the US economy was over 100% of debt GDP. Most economies were. What did they do? Financial repression. They shortened the debt. They rolled it every 4 or 5 years. They use yield curve control to financially repress, which is essentially currency debasement, because they, at the time the dollar was pegged to gold. So it's the only way of doing it that way. And then what they did was wait for population growth. They're the baby boom, the largest in history, and productivity growth from technology. And what happened was GDP grew faster than debt. And over time, debt to GDP fell to a manageable level. Until the inflation of the 70s, driven by demographics, kicked in as everybody started getting into their 20s. And so we've seen that before. So this way around, our thought process, when we first said it, people thought we're insane, but I think it's becoming pretty obvious that AI and robots are replacement humans. And we're going to have infinite at some point. So the idea is, where does we have infinite? Because that breaks the whole GDP magic formula. Right, nothing makes sense anymore. We call that point the economic singularity, and we kind of finger in the air said probably by about 2030, because everything is going exponential in terms of speed of AI and robots. We probably have no idea what an economy looks like anymore or what it means. Everything we all look at is going to fall apart. So we kind of think we've got 5 years. So this cycle and the next cycle. And part of something Julien and I talk about between us too is like this cycle, people are starting to get it. I think once we get through a pause that refreshes, a contraction in liquidity, the cycle, I think the next cycle, everybody's going to go all in and realize it's the kind of end of times, because we just don't know what's beyond that. Nobody does. And anybody who says they do is lying, because we have literally no idea. When you've got free intelligence, infinite intelligence, and we don't know. And we don't know, what the energy constraints are going to be, or whether there are any, or whether we solve them. We just don't know. So I'd rather be honest with ourselves and say, right, okay, we got 5 years. That's it.
Yeah, I mean, the everything coin will basically work until it doesn't. And the reason we know it'll work is, if we come back to the charts for a second, as Raoul had said, GDP's in decline. It's trend rate of growth is 2%, and keep that 2% in mind because that's important. The working age population is in decline, productivity is in decline, but debts have exploded. And, something a lot of people talk about is the fact that the private sector has deleveraged since 2008. But what people don't understand is that this has been a forced deleveraging by the banks by tightening credit to households, right? But because productivity is in decline and demographics are in decline, this debt can't just disappear, right? We can't grow ourselves out of that debt. And so we went from 140 to 120% GDP. Well, where did it go? Well, the public sector took it on, right? So it went from 100 to 120% of GDP. And this is where the problems start. And this is where we uncovered the everything code. We've been unlocking it, over the years. But essentially, if trend rate of GDP is at 2%, let's say interest rates are at 2% for easy math. We know they're not. We know they're at 4%. But that all of a sudden means that 100% of GDP is going towards funding private sector debts, right? Which is an unproductive source of GDP. So to avoid a GDP doom loop, the only thing that you can do is, again, put it on the balance sheet, right? And there's just a huge, and if you just look, this is US total liquidity, which, as Raoul said, it's public plus private liquidity. There's just a vast amount of interest payments which still need to be monetized. So what's going on is, which is, they're basically issuing debts. They're basically issuing debts to finance the interest on the existing debts, which at the end of the debt refi cycle, once interest rates going to scan down a little bit, once interest rates come lower, it just gets thrown on the balance sheet. Right. But there's two phases to the everything code. China's passed phase one because bond yields have come down because their economy has, nuked, to an extent. But in order for them to actually make use of the balance sheet, rates have to come lower first. So that's phase one. And then phase two is debasing.
And Felix, the other important thing, and I'm sure you've been talking about this as well, is they keep shifting the game. The game was the balance sheet. We all knew the game. Then it moved from the balance sheet to the Fed net liquidity. So then everyone's working out the TGA versus the reverse repo. Yeah. And then they went, actually, it's total liquidity because we're going to stuff it into the banks. And now the next one is they're going to stuff it into stable coins. All they're doing is fine. That's Scott Bessement's job, and Janet Yellen's job was the same. They're bond salesmen. They're just, they're masters of the universe bond salesmen, and their job is to find where to absorb this, and that is all part of the M2 growth.
True cryptocurrency value is being quietly developed in the background through GitHub commits, developer forums, and community discussions, despite the fact that headlines frequently follow hype. The importance of surface-level indications such as chart patterns and viral posts is emphasized by Raoul Pal. These indicators only tell a portion of the picture. A more technical and hands-on approach is required in order to identify genuine and promising ideas before they balloon out of control or fail entirely. A project's health and momentum can be inferred from its activity on GitHub, which includes things like regular commits, active contributors, and documentation that is kept up to date. For example, Internet Computer ICP is now the most active project on GitHub, with contributions from more than 120 engineers. This demonstrates that the project is actually developing rather than just marketing itself. A project that claims to have launched in the third quarter but has not shown any recent activity on GitHub should raise warning flags.
There's no way an aging population will accept large amounts of immigration. We've had so much of it. 2022 and 23 were the largest immigration rates for Canada, Australia, the US, the United Kingdom, and all of Europe in history as a percentage of population.
Yeah, last year we had, I think it was last year we had the largest annual increase in the US going back to since the records began in like 1850, which partially offset the everything code, right? Because there was less liquidity required, which could offset that demographic pillar. So it was really, it's incredible.
And the point being is it was clearly agreed, like the everything code has been agreed by all of the central banks and governments. They all clearly agreed, let's try immigration, because everyone knows the formula for GDP. They tried it, it backfired. So we don't have a choice. We're going into this world of technology, kind of Elon and other people have made it clear that this is the only way out. And the societal impacts on this are dwarf anything that we've ever gone through in history. Because we value ourselves and our jobs and our self-worth on the value of our manual labor or our intelligent output. You go to university, whatever, you become a lawyer, you charge more for your hour than if you're a manual laborer. That's how the world has worked. Capital versus labor. And we're just going to make manpower and intelligence infinite, which is the single most deflationary event that's happened in all of humanity. People can't see it yet because people are still squabbling over, oh, they need to buy oil for the energy. I'm like, fuck me, do you not understand? Every job is a zero over time. In the kinds of jobs that we have today, things will adapt. And Julien and I play a game with each other, which is like, you just talk about when you went out into the street, or you go out for an evening and figure out which jobs are still going to last. You get in a taxi in New York City. You go into a taxi in New York City. The taxi driver, okay, he's gone. The Uber driver who's next to you, well, he's gone. The van driver, he's gone. The courier, he's gone. The delivery driver, he's gone. The postal worker, they're gone. It's like, oh my God. The restaurant server, the Starbucks person, gone. I mean, everything is gone.
Even the suits. Those guys are gone.
Yeah, they thought they were safe.
Yeah, they're
Yeah,
gone.
that's right. Even the creatives.
Gone.
Right, that was the last thing. And that's now not happening. So, the only thing we're going to have left is the ability to be human. And we'll reconfigure ourselves around that. Because, I mean, I don't know what value is at the end of all of this. This is why this economic singularity thing is a really big deal. And I'm not saying that the value of money and the value of everything overall falls apart in the next 5 years, but in the next 20 years, for sure.
Yeah, what it really means is we just have to redefine how it is that we identify ourselves as individuals, because for so long, we've gone around and said, well, I'm Julien, I'm a banker, or I'm
education.
Oh,
I went to university or whatever.
And the other unbelievable thing as well is when you think about your social circles.
Sorry, Julien, did you say banker or wanker? I wasn't sure. I just misheard.
Wanker, totally wanker. When you think back to your social circles, like as an investment banker, like your social circles are like your friends that you work with, right? But then what you realize is if you've ever moved jobs or changed jobs, that you actually don't talk to those people in the same way that you used to, and you realize that it was kind of a forced relationship. But once you remove the entity that you work for, that you were all there for that same common goal and reason. So I think what it ultimately offers up is an opportunity for humanity to evolve to a point where it's actually much, I don't want to say purer, but your friends are your friends because they have common interests, and you do the things that you want to do, not because you have to do them. You see?
Yeah. I always think back I think it was in the 1940s or whatever, when John Maynard Keynes was making the argument that in a couple decades, we'll only be working 10 hours a week or something. And I think he was wrong on the timing. I think he underestimated the amount of just friction involved in just the expectation of a 40-hour work week. But I still think about that idea that, we could get into this world of 5 to 10 hour work weeks, where you have more time for creative thinking.
We wrote about this in GMI because somebody asked me a question, which is like, what happens to Uber in a world of robo-taxis? And it actually went into a long article. But one of the things we realized is that think of time that you have, your free time. Think of how much of it is doing stuff, errands, chores, stuff, right? Most of that goes away. It's already, you order food and it comes to your house. But there's a man delivering it or a person delivering it. Soon it will just be a drone or a robo-taxi.
Or a robot riding in a robot taxi.
That's right. Because that's the fastest way for a robot to get from an Android robot to get to A to B is actually in a robo-taxi, which people don't think about. So all of the errands that we could do, I need to go to the dry cleaners. You don't need to do any of it. So I don't know we're going to have a lot more time than we understand. But to do what we don't understand yet. It's kind of this weird world, As you say, do we work less? Probably, but we need to figure out what value accrual we get from the economy and how we get paid. I know people kind of lazily say UBI. I think there's a number of other ways we can economically participate, but we need to figure that out. And the political structure is no way able to deal with this, because we're getting to the point of physics, philosophy, psychology, all of these things merging with economics as well. And so you have to be a really forward thinker, because it's happening so fast that by the time they figure out how to regulate something or do something, it'll all be too late.
The use of GitHub, Discord, and X, which was once known as Twitter, are emphasized by Pal as crucial tools for identifying crypto gems at an early stage. Discord demonstrates how the community and developers communicate with one another, including the repairing of issues, the debate of features, and the exchange of feedback that causes real improvements. GitHub, on the other hand, discloses what is being produced. When compared to a Discord server that is flooded with Lambo spam, a Discord server that is thriving and has developers actively participating is significantly more meaningful. Meanwhile, X provides a direct line of communication into the activities of developers and pre-release insights. Frequently prior to the announcement of official information, it is possible for investors to obtain a competitive advantage and eliminate hype by keeping track of what actual builders are testing or shipping. Because you are able to track innovation at its source when you use all three platforms together, you will have an advantage in the rapidly evolving cryptocurrency industry that is both more intelligent and earlier.